If you own your company's stock in your company retirement plan, like a 401k, there is a good chance that you have seen some growth on that particular stock. Today, we're talking all about net unrealized appreciation, or NUA, and how you can save yourself some serious tax dollars. You don't want to miss today's video. If it's your first time here, my name is John Boyd. I'm a certified financial planner and I'm the founder and lead wealth advisor at Modern Wealth. If you like today's content, be sure to hit that like and subscribe button so that you keep getting content just like this. And of course, if you need help with your own finances, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. So if you have company stock in an employer sponsored plan like a 401k and there's been growth on that stock, there could be net unrealized appreciation to take advantage of. NUA is different than any other form of appreciation that you see in your retirement plan. Here's how it works. Let's say you work for XYZ Incorporated. You have a 401k with them and have had their stock XYZ in the account for years. Now, let's say that you originally bought the shares for $5,000, but are now worth $50,000. For the sake of simplicity here, let's assume that that's the only position in your 401k. Now let's fast forward in time to when you retire. You now sell that stock and you start drawing down from that $50,000 401k account. Every time that you take money out of that account, you will pay ordinary income tax. Now this is where NUA comes in. Using the same example, let's say you decide to take advantage of NUA this time. What you would do is move the shares of XYZ to an after-tax brokerage account. The result of doing this is that you would pay ordinary income tax only on the cost basis of your shares, which in this case is $5,000. The shares are now in that after-tax brokerage account with an unrealized capital gain of $45,000. Now, if you sell the rest of your shares, you are now paying long-term capital gains on the NUA that was in your retirement plan. Long-term capital gains rates are generally taxed at 15%, but could be potentially low as 0% if you play your cards right. I will leave a link in the description of this video to how you can pay 0% in capital gains tax if you haven't already checked it out. Now, the million-dollar question is, how do you qualify to take advantage of net unrealized appreciation? Well, there are 4 key events that could allow you to qualify to use NUA. Those events are death, disability, separation from service, or turning 59 and a half. So a good example of NUA that I have seen a lot in my career is someone who has worked for a company for perhaps decades. They have company stock within that retirement plan and they finally retire and now need to create a cash flow plan for retirement. If there's a lot of NUA, since separating service is a qualifying event here, we'll go ahead and distribute the low basis stock to a brokerage account. And then in subsequent years, when they aren't working and income is lower, we'll trim that company stock and ideally have a cap gains rate of 0%. This effectively allows us to take all that capital appreciation over time from that company stock and allow it to be tax-free. The only thing that we're paying tax on is the cost basis. So if you have NUA in your retirement plan and you're maybe on the cusp of meeting one of those 4 qualifying events, you need to be careful about rolling over your 401k or employer-sponsored retirement plan to an IRA. I see a ton of people get really giddy about rolling over their retirement plan to an IRA, or they were advised by a financial advisor to roll over their 401k to an IRA. And the fact is that by doing that, you could lose out on your ability to take advantage of NUA. So before doing any sort of rollover, if you have NUA, be sure to take advantage of NUA first if you plan on taking advantage of it before initiating any sort of rollover. Bottom line is, if you have company stock in a retirement plan and you're sitting on a big gain, you need to know about NUA, since this could save you a ton of money if you execute it right. If you have more questions or need help with your own retirement plan or finances, reach out to us at www.modernwealth.com. It's been a ton of fun, guys, and I will see you next time.